All right, check, check, quick sound check. Can everybody hear me loud and clear? What is going on, chat? Hopefully, everybody's having a good day. Let me know if you can hear me and see me well, and we'll get started in just a minute. Welcome to At the Buzzer. A lot of negative delta at the end of the day. Got a 5 out of 5. All right, loud and clear. Welcome, everyone, to At the Buzzer, our market recap. This is your first time here. The goal of this session is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay. I've been a top step performance coach since June of 2023, trading for the past 13 years and in the futures markets for the past 6. Coach Paul is normally here with me, but he is out today doing some traveling, but he should be back possibly tomorrow, if not sometime later in the week. But you are all here. Want to thank you all for joining as always. And let's get right into it. Let's get right into these markets. Not a lot as far as economic events go on the calendar. No real planned numbers. We do have some numbers coming out later in the week. We got some Canadian CPI tomorrow. We got housing numbers out tomorrow. Numbers out of Japan. FOMC minutes later in the week. We have Jackson Hole starting this week. So I'm sure we'll hear a lot out of that as well. That'll give us some headlines, jobless claims, of course. But a pretty quiet day today as far as planned headlines go. We know we did also see, the meeting between President Trump and Zelensky and the rest of the EU leaders, European leaders, on the war between Russia and Ukraine and looking for a peace deal to be done there. And hopefully, we're hearing some resolution from that soon. Uh, Outside of that, pretty quiet on the news. Pretty quiet on the news, so we can get right into the markets. There are 35 different markets we can trade with Top Step accounts, and today, to the downside, we had micro Ethereum down 0.52%, wheat futures down 0.84%, and soybean meal, our biggest percentage mover, to the downside at 0.98%. To the upside, we had heating oil up 0.84%, crude oil up 1.02%, and RBOB gasoline futures, our biggest percentage mover, to the upside at 1.41%. To talk about our big four, we already mentioned crude up 1.02%. The S&P down 0.05%. Gold down 0.13%, and the NASDAQ down 0.04%. So the equities pretty much closing right where they opened, or closing where they closed or settled on Friday. So I see a lot of traders already in the chat saying, "Oh man, what a boring price action, sleepy day. I got chopped up." The markets did as well, right? The markets didn't really go anywhere. So if you did get chopped up on a day like today, just identify, what type of day it was. Ask yourself, when we do these reviews, the trade setups that I was looking for, was the market really presenting that opportunity, or was I looking for the market to present that opportunity? Andrew just said it. ES was hugging settlement like a drunk hugging a porcelain porcelain pew, right? It did not really go anywhere. Saw a lot of chop, a lot of consolidation. We know that there's some more stuff coming out later in the week. So there may be more opportunity, but for today, the Nasdaq range all day. Let's take a look at the daily. All day range in the Nasdaq high to low. This is including the overnight, was 160 points. The daily ATR, this is a 14-day look back, is 280. So pretty consolidated, but that is just to start the week, right? 4 more days left in the week. So we may see some more movement. Let's take a look at a couple of things here. And if you guys do have any questions, let me know. This may be a quicker version of At the Buzzer, but if you guys do have any questions, put them in the chat. Feel free to ask, and I can answer them from there. One thing I'm looking at this entire week is this daily candle, August 12th, which was the PPI day, right? You heard Hogan and I potentially talking about this if you were watching the opening call this morning. The NASDAQ looks a lot weaker. So we got a little bit of a trend line from the all-time high. We have this PPI candle, which was a pretty big range, 23,596 at the low, 23,953 at the high. And you can see once we traded above that, we haven't seen much volume or price action above that range, spending a lot of time in the 50% of it. Look at this daily candle again. We pretty much closed where we closed on Friday. That is a doji if I've ever seen one. We opened, where did we open the day? We opened at 23,795 in the NASDAQ and closed at 23,793. So a 2 point day, which is pretty insane to think about. Let's take a look at last night's price action. Yeah, and I had a decent day today. Took trades that we talked about during the opening call, and then locked it up because I realized that we weren't really getting breakout price action, and I had to lock it up, or I could have given back profits. So last night, maybe a decent long opportunity. Anne Marie and I were doing the market kickoff last night. We saw early on a pretty nice spike in volume. If you're looking at, normally Coach Paul and I look at the 30-minute opening range for the Globex session. If you were looking at a 3-minute, you got an urgency trade here, right? In that next 3 minutes, volume left to the upside. We had a 50-point push to the upside, which was a nice trade. And from there, we made a high 23,880s in the overnight session, and that was it. We pretty much sold off from that point. The New York session, like you guys are all saying, was a lot of chop, a lot of back and forth price action. That is where I made the money on this account today, but it was looking for opportunity in specific places and not trying to force too many trades. The minute I started forcing trades was the minute I realized, hey, you're looking for something to happen in this market instead of identifying something that is happening. So lock yourself out before you get back profits again. This 23,775 area, which was 50% of that PPI candle, was my pivot for the day. And I was looking to, trade around this depending on how the market responded. So we'll go down to regular trading hours. You guys know I trade on a 3-minute chart. If we look at the VWAP for the day, it was pretty close. It ended the day 7 points lower than that level. So that was, that made sense as a pivot to me. For whatever reason, I identified this as an area. You guys know why. It's 50% of that range. And then if we look at it, we talk about range-bound markets, meaning, we talk about flat VWAP, meaning range-bound market. If I look at the New York session range, that VWAP was pretty much a flat line. My profit from the day came from a long down here, traded down to 23,750s. Volume didn't go with this trade. So I took a long back into the range, back into the other side of the range, looking for a push here. Coach Paul is out today. He should be back either tomorrow or later this week. But this was really it. I spoke to Coach Paul the other day about how I'm going forward executing these trades. You guys know Coach Paul's suggestion of looking for a 2-to-1. The risk on this trade when I took it was about 40 points. Looking for 80. That's exactly what we got. I did not take the full 80 points with the full position. Took one contract off at a 1-to-1 just to pay for the trade. Went stop to break even from that point, and then took the rest off up near these highs. And that was pretty much it. Again, like I said, I took another trade, but this was a pretty range-bound day. I know for myself, a lot of times I'll find my executions end up in the middle of that range, and I want to be careful of that, not risking a whole lot in lower quality for my setup circumstances. 70 plus average, high 50s for the average. MS, I'm not sure what you're talking about there, but we did have a J trade at the lows as well. Another opportunity. If you're not aware with this trade, what we're talking about, we had high volume, the highest volume, and even in a range bound market, this is going to work, right? I should say work. Nothing works 100% of the time. We had the highest volume outside of the open at the lows, set the low for the day. We closed above it. We never closed below that range. We never closed below that range um, for the rest of the day. So again, even in range bound conditions, one of the setups that we look for all the time still plays out. Do we get a 2 to 1 here? I don't believe so, but still a pretty decent trade. You need to trade it with a, we're looking at a 40-point stop here. But if you're trading with micros, you can stomach that risk, right? 40 points with a one lot micro is $40. $40. So I could take that risk, right, on this trade. And if that's too little, I can add two, right? But I'm not blowing my account. Again, same setup still works. We never took out that low. All right. Is it $80? Yeah, $80. Sorry about that. $80. $80. But you guys get my point. $80 risk with a one lot. Uh, all right, and that was pretty much it for the Nasdaq. Where do we go for the rest of the week? Again, I'm looking at this August 12th range. I'm not trolling him. I'm just talking, doing math, making sure I'm giving the right analysis. But you guys get the idea. Uh, I'm looking at this range for the rest of the week, right? Where do we trade from here? We have the 20 moving average. This is below this range, down at 23,520. If we start to see some selling below 23,775, I'm looking at 23,600 as a target. It's what I said earlier during the opening call. We never got the selling, right? We had a pretty balanced day, and until we get the selling or buying, we stay in this range. So, not looking to force anything this week. But if trades set up, I'll take them and manage the risk from there. All right, take a look at the S&P really quick. Similar story in the S&P. Again, I'm marking out that August 12th range. That was PPI day, and we can see in the S&P we're sitting right at the high of it. S&P holding up maybe a little bit better than the NASDAQ, but if the S&P cannot find buyers above this 64, 68 level, I'm looking for that rotation back to the middle of this range here. And we didn't really get any movement again. Again, a market that closed where it closed last week. Not a ton of opportunity for momentum breakout traders. But if you're a range trader, you had a day today in the equities. Uh, See, we kind of consolidated on both sides of that 64.80, 64.68 level. We have the 200 moving average on the 30-minute right above us. We rejected there a couple of times. So all technical levels that we look at daily here played out. It's just we didn't get a breakout. I think it's really important to set expectations for the trades that you take. And if I'm taking a short up here off this 200 moving average, at the most it gave me was 16 points, right? If I'm looking for a 40-point move in the S&P, I didn't get it today. So, in the traders that said you got chopped up today, if the expectations you had for your trades fit the market personality, would you still have gotten chopped up? Is my question, right? How many traders were maybe in good trade location for some of your trades, saw profits, and just didn't necessarily take profits because you were looking for more and the market took it back? Prime says better days are coming for us. I agree. I agree. Josh, do I trade micros? I'll switch between micros and minis. It really depends on the setup. These trades that I took today were in minis. These trades were in minis. But I will trade both. What information is the market waiting for? Well, we have Jackson Hole. Market's waiting for whatever's going on with Trump, Ukraine, and Russia, and the rest of Europe. But this was a really nice day for range traders. And again, if it's not your day, stay out of this. Right? If it's not your type of price action, stay out of this. Uh, right. Tess wants to know what happened to the quiz and Thunderdome challenge. The quiz is postponed, and I am still looking to do that giveaway, but I'm not going to do it unless I have the go ahead. So I'm still waiting on that go ahead. We have the questions ready to go. We just green light, and the Thunderdome resets should be coming this week. Should be coming this week. We do have the list of traders who were eligible for it. I don't control that. I just when they tell me, I'll let you guys know. and we will go from there. All right. Feels like I'm in an episode of Deal or No Deal. All right. Any questions on the equities? If not, we can move on. Let's take a look at the Russell, like Coach Paul would normally like to do. See anything different in the Russell today than we did in other markets? We can see that August 12th candle a little bit different here, right? Where we have the Russell holding that high and bouncing off of it a little bit. Uh, Maybe looks a little bit stronger. We had the Russell up 0.4% today, so not the biggest move. We've seen bigger percentage moves in the Russell before. Uh, but still kind of the same case here. Really not much direction. We held that high overnight, opened right at that 200 moving average. That set the low for the session and just didn't see a lot of continuation. And that's okay, right? We had that 200 moving average right above us pretty much the entire day on the 30-minute. But a decent trade maybe in the Russell here, but still kind of just hanging out in this range. Looks bullish though. This looks bullish to me, right? 2 down days in this somewhat uptrend. We're holding the high of where that volume came in. So as long as we continue to hold this high with some buyers stepping in here, I'm looking for the Russell to continue pushing higher here. Right? And we got a question. How can I use ATR to feel how many points you can get? So I'll go back to the NASDAQ, for example. Um, the ATR is an indicator that you're going to use, and this is the Coach Paul suggestion, right? You're looking at 2 times the ATR as the value for your stop, right? Now, here, let me just pull up the executions that I had on these trades. I actually did take probably more trades than what I thought I did, but I took a short. All right, so here we go. This long here was the profit for the day, right? I got long 23,755. So we'll just mark out that price 23,755. Here's how I managed that trade. 23,755 was my long entry. Now we're going to look at a couple things here. These 23,755, right? So at this point, I'm taking this trade. Look at this ATR value. It is 21 points, right? So my stop is going to be 40 points. Right now, instead of looking at immediately how much money can I make, it's how much am I willing to risk. Now that 2 ATRs, if we look at it, that 2 ATR from my original entry never got stopped out, right? So that's the first point. Not how much dollar wise am I willing to risk, but how much room does the market need to do its natural fluctuations to keep me out of the price action, right? If it breaks this, then I'm out and I'm wrong on that trade. From that point, it's a 2-to-1, right? So we're looking for 80 points from that point. And we got close to it. We didn't get exactly to it, right? But this as long as I'm in good trade location, right? As long as I'm in good trade location, I could look for somewhere close to 4 ATRs. So 80 points in this case, if I'm in good trade location. If my trade location was here, can I still look for those 80 points? Right? Trade location matters in day trading, right? I'm kind of late to this move at this point. So trade location, and this is why sometimes you'll see me, somebody ask, do I trade micros or minis? I traded minis with this trade because my trade location was where it was, right? There are going to be times where I realize that, hey, I'm late to a move. How do I consider being late to a move? If my original entry should have been down here, right, at these 23,755s, if my entry should go down here, and I know from that point I want to risk 40 points, if I'm not taking the trade until here, I may say to myself, hey, there's another 40 points available in this move, but now this is an inverted risk to reward. Am I willing to risk the same amount contract wise? At this point, I may still take the trade because I think there's 40 points available, but I can't take it with the same size. So now this might be a 2 micro trade instead of a full mini position. Hopefully that makes sense. Right? But that's how I'd use the ATR. I know you've been asked it before about how do you set your 3 minute opening range. 3 minute candle, you're just looking at the high and low of that candle, right? So here's the first 3 minute candle here. You guys can use whatever tool you want, right? You don't even have to use a tool. You could just look at the price. But I'm using a fib tool and just putting it at the low and high of that candle. You could use vertical, you could use horizontal lines. You could use a rectangle. Put a star at the top of the line and at the bottom. Just something to kind of frame out that first 3 minute candle. Use whatever drawing tool you want to. And then for me, I'm attaching VWAP to it just to see how the market responds. That VWAP stayed in that range pretty much the whole day, which tells me range bound market stayed the extremes. So I think I actually did take a short somewhere up here earlier as well. All right, but just mark out the high and the low. Good question. Kevin, Kevin, Brian, and JD, what's going on in the chat? See some conversation going on here. I'm trying to keep up. Hopefully, you guys are doing good in Texas. All right, let's take a look at gold. Take a look at gold on the 30 minute. Let's look at a daily first in gold. A lot of indecision here as well. All good. A lot of indecision here as well. Gold kind of falling out of the middle of that range, which is what we want to see. We've talked about it. I don't know how many times now. It's been 120 days with gold in this balance range. We are trading down towards the lower extreme of it. I'm paying attention to kind of us making higher lows on this daily, right? Where every time we come down here, the low gets a little bit higher, just by a couple points maybe. But again, looking at the August 1st candle in gold, right now we're sitting at 50% of that. We see any sellers below 33.75, then I'm looking for a rotation down to 33.30s. But what have we seen so far every time in this zone? No conviction from sellers. We're not seeing buyers really step up and gain any traction either. They keep getting rejected at 3,400, but this is the lower extreme of that range until it's not. And gold does have the potential to move pretty big, but right now we're seeing a lot of consolidation. Today was a 34-point range, $34 range high to low. So some decent opportunity, but still very range bound as well. Can I give my opinion on the gold weekly chart? It's going to be pretty similar to the daily because we are in this range, right? On the weekly, we're rejecting at 3,400s, which is that 20 moving average. Gold has been in this Dorito pattern for I don't know how long, right? And it's tightening. We're seeing the ranges contract, but it is a very tight range until it breaks out. Aaron, what's up, man? I saw Aaron had a pretty nice gold trade. Now we're talking about consolidated ranges. Aaron and Dakota both caught longs in gold last night. Again, just because the markets are consolidated does not mean that there is an opportunity. Let's take a look at the opening range, 30-minute opening range from last night in gold. We know a lot of that volume starts to come in during the Asia session. So initially we had a decent sell-off for the first 2 hours. But then that volume comes in for the Asia session. That's 8 p.m. Eastern time. That's this candle right here. And then we get a spike to the upside. And from that point, Asia session volume comes in. Really nice trade. Back up to 3,400s. Super psych level. Everyone who's trading gold is going to know when we're trading at 3,400s. Might be a decent spot to start to look to manage a trade. Maybe you don't take your full position off because gold has traded away from this. But if I'm long from 33.80s, I'm taking something off the table as we get to 3,400s and we don't see that momentum continue. Doesn't mean I have to short up here, but if I'm long, at some point you got to take profits in order to, see your good trades play out, right? So maybe I'm taking some profits at this 3,400. Same thing if I'm short, where have we continued to bounce? This 33.75 area. So do I take my whole position off? Maybe not, but am I taking some profit? I'm in a 3 lot. I might be down to 1 by the time we get down to this target because what price action has the market really shown us to say that we have the potential to continue? Right now, not really much. I got to manage what the market is showing, not what I want to see. So does that mean it's about to break one direction since it's tightening? That's what you would think, but also I'm not gonna bet the house on this breaking one direction because look at it, right? It's been 120 days in this range, and really, if we want to talk about what the range is, it's 33.30s up to 30 through 35.20s, right? I'm not even gonna include this. Uh, JD just said it. It spots to limit risk, right? You're never going to hear me say, "Oh, it's going to break to the downside. It's going to break to the upside," because I have no idea, right? But what it's showing me is that it has the potential to trade both sides of this range. Right now, it's trading down to the lower extreme of it. Um, this gives me a little bit more of an intermediate level to limit risk if I'm looking for longs off the 75s. But once I start to see volume trade below this 75, I'm out, right, of any longs because what has this market shown it has the potential to do? Trade all the way down to 33.30s before it really bounces. So, um, do I expect a big move coming out of gold at some point? I do. But if I'm going into tomorrow saying today's going to be the day, I'm doing myself a disservice at that point because I don't know that, right? The market's going to choose. Nothing wrong with Beck in that. Kevin, is it Tequila Mondays? Margarita Monday? Margarita Monday. It might be. And if you're celebrating, hey, I don't mind it. I might get one too. Tawana says, I was in cells, but it was doing too much playing for me. Yeah, I mean, these days look at the range on Friday in gold, right? 17 points. That's a tough range to trade. And Nslug says it, trade the range until it breaks. But if you're not at the extremes and you're somewhere in the middle, there's a lot of, you know, mental capacity spent in the middle of a range, hoping that it's going to go in your direction. I'd almost rather be flat and then just wait for it. Uh, all right. Let's take a look at crude oil really quick. Crude on the daily, another market in range, finding balance. We have the 200 moving average on the daily, which is at 63.37. We spent a bunch of days below it, but Hogan and I talked about this during the opening call as well, looking at this $62 level to see whether or not we bounce from there. It's kind of near 50% of whatever this range was August 13th. And still in balance, still in balance. I have not traded crude really at all, just because I don't see a ton of opportunity in it myself. It has presented some decent trades, but I can't see it, so I'm not going to force anything. The one trade I almost took in crude today was a failed volume trade. We've talked about this before, and actually we have a decent. I can see it now on the 30-minute. Got a decent J trade here on the 30-minute. This is 9:30 Eastern time. Close above it. You know, by the time we closed above it, we were pretty far away on the 30-minute. But I think you definitely don't get a 2-to-1 here, but you may get a 1-to-1. At a 1.5, close to a 1.5, right? Letting this close outside this range. The one trade I almost took in, and if you took that on a shorter time frame, right? If you took that on a 3-minute chart, maybe you do get that 2-to-1. One trade I almost took here was this failed push into 63. One of the things I've talked to you guys about before was looking for volume to come in. This push in crude oil happened as Trump and the Ukraine were meeting. There was a decent amount of volume that got traded up at this high into a major level. This whole number level 63, right? I actually had my finger over the button to click sell. I should have done it. I would have sold right at 63 with limited risk, right? The ATR at that point on the 3-minute was 20 ticks. Shouldn't talk about a trade that you didn't take. But this push, you can see the volume. Is it sustainable at these highs into a major level? It wasn't. Nice rejection off of that. Could have been a good trade, but could have, would have, should have. Didn't make any money on it. So next time I'll click the button. Ended 6 wars. Rich and Bedside has a question on the J trade. Do I just want the candle to close, or do you want VWAP to tell you anything? It's a great question. So let's take a look on this one here, right? We got I almost attribute percentages to each one of the confluences for the trade, right? So is it a J trade if we never get a close outside here? of this range, right? That's the first question. So we need a couple of things for that trade to even exist, right? We need high volume somewhere near the low or high of a range, right? If we don't have that, it's not a J trade, and if it is, it's a lower percentage one. But if it happens at the low or high of the move, that's maybe a 30% trade. Then if we close above it, this might now make it a 55% trade. If volume then leaves that range or supports the move, that might now make it a 75 to 80% trade. All right. So hopefully that makes sense. So the volume leaving the range, does it have to leave the range? It doesn't always have to. It didn't in this case. Does it help the trade? Does it help support the trade idea? If it does, it does, right? So ideally, I want to see that volume leave the range almost immediately. And again, I'm picking this candle right here. We got two of them, kind of, because I'm using a 3-minute chart. If I was using a 5-minute chart, would that be a little bit of a different candle? It would, right? But we get that close above. Closing within a couple candles, urgency, or you're happy to wait 15 candles. So great question as well, right? Am I willing to wait? It depends on how much time is left in the day, right? This one happened with, all the time in the world left for the day. This was 9:30 Eastern time. So we have 7 hours left for this trade to play out. I may wait here. If we have, 30 minutes left in the session, we get high volume and I'm waiting until, MOC or right before close, then I'm probably not going to take it. But if we have time in the day, I'll wait. Of course, if it's an urgency setup and that volume leaves right away, those are going to be A plus, right? Some shots, bring it back to sports analogies. Some shots are, if you're a basketball fan, you see Steph Curry shoot the ball from the corner and he just looks away as soon as he lets it go. Some trades are that, right? Some trades, ball's going to hit the rim, you got to watch it go in, right? Because it's just like, oh, could this, it's not the greatest shot in the world, and it's the same thing with trading, right? Some of these setups are going to be A plus. Volume leaves the range, price leaves the range. Take, max position size for whatever you're comfortable with because that's that A plus setup. Other ones are going to be a little bit iffy, and then you have to manage it. So got some traders in the chat asking what is a J trade. Coach Paul gave it the name, and here let's try to find an example. So what we're looking for is high volume at the extreme of a range, a high volume relative to what has been trading near it, right? So this one, is it one? It's an iffy one. It's not the highest volume of the day, but it is at the lows. Traders always ask, how do you know that's the low? Isn't that hindsight analysis? It is, and that's why we wait for the close outside. So we wait for this close, and the trade is you're buying above the high of this high volume, risk below the low, and looking for a 2-to-1. Right, looking for a 2-to-1 at that point. So we got high volume here. If anyone sees another market where we might have had one, and the reason we really want to wait for this candle close, like I said, this trade doesn't happen unless there's high volume, and it's a 30%. If I'm just going with the just high volume, it's a 30% trade. Once I get that candle close, now we're above 50-50, right? If we don't get this candle close above, I'm preempting a trade. And Nslug asked the question, would you personally ever preempt the break from a high volume range? Nslug, yes. The answer is yes. But what I'm doing in doing that is accepting the fact that it's a lower probability trade until I get the other confluences, right? If I take a long and I actually did it today. I preempted this one for sure. Here was the high volume candle that I was buying. Right at that time, it wasn't the closest. Like this was not the best trade setup. I'll be honest, but it was in an area where I kind of found a level. Right, looking on a higher time frame, found a level here. It was below Friday's low. We had decently high volume compared to the average. So I took this trade early. I was fully accepting that this trade may not have worked out, right? Because I'm preempting this. As long as I know that it's maybe a 55% trade here, I'll take it. But I'm accepting that risk. Now, do I do that with a full position? Do I do that with, a portion of the position? It really depends on the discretion at that point. James D was on with Hogan and I earlier today. He asked a pretty good question. He said, how much of your trading is discretionary? How much of it is mechanical? The setup is mechanical. The execution of this trade, based on where my account balance is, where how I think the flow of the market is going, that's where I add a little bit of discretion. This one I took on discretion because I like the setup, right? There was some other volume that I saw. You guys know I use Quantower. There was some volume that stepped in at this low that absorbed a ton of selling. That gave me some added confluence to take this trade. But even still, by the time I took it, this was a 60% trade. Closing above here makes this about a 70% probability. Still has a potential to not work out. And if I manage it incorrectly, I still get stopped out. So I have to take profits up at these highs. But yeah, there are times where I am going to preempt that. But I think the more you look for the trade, the more you'll kind of see where those opportunities are. Let me see something real quick. See if it shows up here. All right. So we're on a 1 second chart here. And I'm not looking at a 1 second chart in TopstepX, but this candle right here in Quantower, I've showed you guys before. We look for some of these volume absorption moves. 424 contracts traded in a second at the lows. That same structure, right? Close above it. That's that trade. So this is why I took it. Now, am I looking at a 1 second chart for this entry? No. But the platform that I use to help me read volume told me that there was absorption of selling at these lows. You can use Bookmap, use Quantower, you can use whatever tools, or you can use TopstepX and take a look at it. And there are more order flow tools coming to TopstepX, but this helped me get into this trade a little bit earlier. All right. We took a look at pretty much all of the big four markets. So if you guys have any questions, let me know. If not, we can probably wrap a little bit earlier, but let's see. Janish has a question. In your 150K subclass, you mentioned you were going to go over the iceberg order, but ran out of time. Would it be possible for you to go over that in a future session? Yeah, I mean, Janish, I'll be honest, the icebergs are not something I usually look at. But what you're looking for there are you're looking for areas that are absorbing volume, right? Let's take a look for a second at the NASDAQ. Hold on 1 second. Let's add a chart link here. And again, I'm not, there's information that you can get from that 1 second chart. I'm not looking at it because looking at a 1 second chart would drive me crazy. But finding or using a tool that helps me find that same information is important. So iceberg orders. Trying to see if I can get an example of it. Don't know if I'm going to get one here from TopstepX. Give me 1 second. Any other questions? Oh, ZB. I'm loading a different platform. Let's take a look at ZB while that loads. All right. On the daily in ZB, the 30-year bonds. So we were talking about this one last week with Coach Paul, right? A couple of levels that we're looking at. Looking at this August 1st candle, that was NFP day. That was a pretty significant price action candle that closed us above the 200 moving average for the first time in a long time. Same thing that we had in the NASDAQ, right? What happens at the high of this candle? We see volume start to die up at the highs. If we attach a VWAP here, where's it going to be? Pretty flat, right? It's in the upper extreme, but it's never crossed above that high. This is a market that on a higher time frame is under very heavy sell pressure, and it's continuing to look that way. Oh, signed out there. Continuing to look that way. So right now we're back under the 200 moving average. I'd be looking at the lower extreme of this candle now as a target. You can see 50% acted as a resistance today. Back under those daily moving averages. And here would be my target to start. If we get some continued selling under this low, where's the next target from here? So I'm looking at the daily, this high volume candle here, which was our pivot. Sell below here, 113.11s. Then I'm looking for 112 25, and then maybe selling through this candle here. We are still inside of this kind of major sell off. All this volume that we had in April, haven't traded back inside this candle. Every time we get up here, we reject. These could be pretty good swing trades. And again, anything we talk about here is for educational purposes only, not for any trading advice. Uh, but interesting markets. I don't know how many traders do we have that trade Treasury products. And Boomer Brian, you have a good point here with the icebergs. They're a lot easier to see in real time because really what we're looking for is you know absorption of volume. So the market's going to trade to a price and reject. It's going to continue to trade to that price and reject. The way you'll see it is, hold on, in a decent amount of, yeah, it's kind of hard to tell um, in hindsight review, but you'll see a decent amount of volume at a level. Let's say there's 100 lot sitting on the offer in the NASDAQ. The market trades up to it, they buy them. We see that 100 lot add to the volume, but price doesn't go higher. Then you see another 100 lot step up at that same exact price. That's an iceberg, right? So somebody is selling at a level, and they're showing a certain size, but they may have more size, to trade at that level, but they don't want to show the whole thing at one time, right? So when we see like 1,000 lot show up on the Nasdaq, I wouldn't necessarily consider that an iceberg because they're showing pretty much the whole position. But if they're doing a 50 lot, then another 75, then another 100, then another 20, right, and continuing to add to those orders, that's an iceberg. Again, it's not something I really pay attention to or really identify in real time. Uh, but if someone calls it out, I'm like, oh yeah, that's what that looks like. Love ZB, very good commissions. Yeah, I mean the Treasury products are great markets to trade. The 10 year, the 30 year, the 30 can get kind of expensive for top step accounts, but the 10 year is great. Um, in an interesting spot right now as well. Great market to trade though. Usually spoofing. Uh the jury's out on still out on whether or not it's spoofing. I don't believe in spoofing, but it could be. Could be. All right. Any other questions that you guys have, let me know. If not, I'm probably gonna end it there. Uh Remember, if markets are chopping around, not presenting opportunities to you, you do not need to be in a trade. Uh what do you mean you don't believe in spoofing? Uh it's like it's like believing in the boogeyman, right? Like if you're a kid and you might know the layout of your house, right, as a kid, but when the lights are off, you're scared all of a sudden because you can't see where you're going. That's how I look at spoofing, right? Should I be worried about a potential threat or should I be worried about an actual threat, right? I'll pay a lot more attention to filled orders than orders that are flashing. There's enough information to glean from actual filled orders that I don't have to worry about what's not filled. All right. Hopefully that makes more sense. Um, right. Filled orders show intention. If they don't get filled, I'm aware that they might be there, but has anyone here ever placed a trade and then decided to cancel it because you didn't want that fill anymore? Were you spoofing or did you just cancel your order? Right. So if I think about the boogeyman, it's going to keep me out of trades. Uh, so I pay a lot more attention to filled orders. I know of people who have spoofed the market. It really happens, and I believe it does. I believe it does, but it's to me it's more of a distraction than anything. I'll be honest. How long have you been trading for? 13 years, Glyph. Uh, all right. But I think I'm gonna end it there. I kind of feel like I'm getting a cold again. But what's going on? I think COVID is going around again. Saw some people saying that, but I'm gonna go drink some tea, get a little bit of rest, and I think I'm joining Dakota for slow markets tonight, so I'll be ready for that. Uh, but thanks everyone for joining. If you haven't done so already, hit that thumbs up button. We got Coach Hoop Coach Hoop's probably not doing his session today because today is his birthday. So I hope he's not doing it. But we got Coach Ray and Coach Vince, 6 p.m. and 7 p.m. Central Time in Discord. And then Dakota with slow markets tonight at 7:30. We have Aaron for the London Open at 1:30 a.m. Central Time. And then D with the uh, Euro trade at 3:30 a.m. Central. So ton of content for you on Top Step TV. Hopefully, helping you become a better trader, helping you with your journey, maybe just entertaining you. But thanks everyone for joining again. Coach Paul should be back tomorrow, and we will all talk then. Have a good one. Bye.